All right. Good evening, everybody. We have an exciting night to talk about an investment opportunity that I'm super passionate about. Looking at how many people we have, a little over 45. I got 46 people on the call at this time. Excited for more to join, and those definitely will be listening in on the conversation after this. I'll have the recording. So if anybody on the call cannot hear the whole thing, feel free to head out, but I will send the recording and some other high level info as well. So, but thank y'all for joining. We are going to be doing a 20 by 50 RV boat and business storage in Bryan College Station. I am, I'll introduce myself shortly, but I live in the Bryan College Station area, and it's just a booming area. So I'm super excited to have this project in my backyard. I do need to start off with a disclaimer. Our attorneys definitely want to scare you before investing, but it's actually good advice. One, anything I say in this presentation, one needs to be known. It's not a solicitation to purchase securities. Only the PPM can do that through the private placement memorandum, and that's where all the details obviously would be found. This is definitely a high level shot of what we're doing. In no way does our company make statements about the reasons this investment, location, project, or similar items regarding this opportunity are good or favorable. And you can read a lot of this on your time when I send this out, but at the very bottom document, nothing in this document has been reviewed and or approved by the Security Exchange Commission. Now, this is a investment through the Security Exchange 506C offering for accredited investors. So only accredited investors will be able to invest in this opportunity. All right, so I always like to start off with 3 reasons why I love this deal. One, it's proven strategy. We bought a property just like this in Huntsville, Alabama in November of 2022. That property was built in 2019 and has been 100% occupied since it was built. In November 2022, we bought it, pushed rents, and we're still 100%. I think it's 125 unit. We've at least gone through about 25 of the tenants that are in there and leased it, without an issue with the waiting list. That's Huntsville, Alabama. But this RV boat storage, we're going to talk about this in this presentation, is everywhere. And as a person who owns a travel trailer myself and park in these campsites and such, it's just booming. The pandemic helped that quite a bit. But the key point in this and why I love it is the partners have worked together, know what we're doing, and can execute this deal and manage this deal just like what we do in Huntsville, Alabama. So the learning curve for us is quite small on this. The exceptional reason number 2 I like about it is we purchased the land last Friday. So we already own the land. Before I purchased the land, I wanted to make sure that the Bryan, Texas city is good with the zoning. So the zoning's already approved for this type of work. So that's incredible. And then I've been able to build a team locally that is just, incredible professionals in mechanical engineering, civil engineering, an architect. The group that's actually going to be developing or building these units is local to College Station. All that means is faster returns. These people, it's a small but big city that know everybody, and we can get these drawings and such in faster so we can develop quicker, lease quicker, return our capital and returns to our investors as quickly as possible. So that's one thing I just love about this deal is everyone we're doing or working with are local to Bryan College Station. The last reason is there's huge demand with the limited supply. We're going to talk about the comps in Bryan College Station area with this type of product, but it's the ultimate value add. With the ultimate value add, meaning we're taking raw land, we're developing a need in a great location, and we're going to reap the benefits of that investment through the life cycle of this property. So those are the 3 exceptional reasons why I like this deal. I typically don't do this slide until the very end. If you've done any of my other investments or watched my webinars, this is a slide I do at the very end. However, we're already 60% subscribed. Many of you on this call, you've already subscribed, which is great. And I really appreciate a lot of repeat investors. I'm sincerely grateful. But as this presentation goes on, people are going to start doing their commitments. So I highly recommend, each slide will have this QR code. So whenever you feel like you're ready to invest or soft commit, you're not committing until you sign the PPM, right? So there's no risk, but just putting your soft commitment, put your name and spot in line. It's first come, first serve. When you do get to that website on our portal, it's going to say reserve now. Go ahead and reserve now, and then put your information. The private placement memorandum is already uploaded. So if you're investing as an individual, those documents are there. If you're investing as an entity, maybe an IRA or a corporation, et cetera, there's a separate document. It's the exact same document on both of them, but it has different boxes to check, et cetera, throughout. So highly suggest, if you feel like you're ready to invest or feel like, hey, this is something you're sincere about, like go ahead and use this QR code to get to the website and go from there. But super exciting at this point. We're 60% subscribed without even doing this webinar until now. So who are we and who am I? So I'm Wayne Courreges. I've been in commercial real estate for the last 16 years, managing and operating commercial real estate. I started with single family in the Marine Corps. I bought my first rental property in 29 Palms in, I guess, probably when I was 20 years old or so, and really had the bug for real estate, my whole professional career. I am now full-time into CREI Partners. I do not have a W-2 job. This is my living and something that I'm just extremely passionate about, especially now that I'm able to really focus in on our projects to boost our investor returns. Over the last 3 years, we've grown quite a bit. Texas, Alabama, and Louisiana are states that we invest in, along with other future Southeast U.S. States in the road. I just love the Southeast and Texas for many reasons. But for now, we're heavily invested in this exact project that we are developing. Everything about it is like a rinse and repeat from our project in Huntsville, Alabama. I've got an MBA from the University of North Carolina, Kennan Flagler Business School, and a Master of Arts in Economics from University of Oklahoma. I host a Texas multifamily passive and active investors meetup monthly. So if you're interested in doing a monthly meetup, it's all education, it's free, it's virtual. It's the fourth Monday, of every month. We've got over 1,400 members there. We've got a podcast, Untold Stories of Real Estate Investing. We've got this admin for Texas Multifamily Passive Investors Group if you want to join our Facebook group. I am a former U.S. Marine, Eagle Scout, member of Rotary Club. Service is something that I'm extremely passionate about, and excited to now introduce you to our partners. Both of these guys, there's two other partners. One is Stuart Heath here. Outstanding, as my dad likes to say, good-blooded people, like just good people and people that I've done deals with. Like we're actively in other deals. So I'm super excited to have both Stuart and Ethan, who I'll introduce in a slide next. But Stuart's based in the Tennessee area near Huntsville. He's formed Harvard Grace Corporation. He is a CPA, got his business administration from Auburn University. But more importantly for real estate, he's done this 30 plus years, real estate developing and owning and managing properties. He is the main lead sponsor at this exact same type of property in Huntsville, Alabama. For those that are on this call or listening who have done our investments, know that we've cash flowed, I think 3 times already since we've purchased the property in December. So super exciting. We're hitting returns. This guy's an outstanding person. I'm really grateful that he's partnering with me on this deal. And this brings me to Ethan Gow. Ethan's also good-blooded people, Cornell graduate, based in the Houston area, so close, wonderful family. He's spent several years as an in-house counsel at a mutual fund and a hedge fund, general counsel of a manufacturing company in Houston. He's originated and funded over 170 private loans to real estate investors. He's rehabbed and sold properties over the last 4 years. And he's just really a person that I enjoy partnering with, because we're able to work, from his legal standpoint, my operations, and just his background in real estate investing in general. We've just become a really great team. So my goal is to do a lot of these rinse and repeat with good people like Stuart and Ethan. So the reasons why I love about investing in RV boat storage: one, it's extremely hot in Texas. When we first started our camping, so Eagle Scout, my son's 11. I hope we get into Boy Scouts, where there's going to be a lot of camp tenting. Well, that wasn't really an option for us early when we had young kids. So we started off with a pop-up trailer. We got a travel trailer. So I've lived and breathed this RV boat lifestyle for at least 10 years. And when I lived in Austin, for those that are listening and have an RV or a travel trailer, you'll get what I'm saying. It's really hard to even find a carport for your RV. Where we lived in Bee Cave, there were 4 locations down 71 where I just had to keep going further and further out because everything was booked and had a waiting list. And that was a carport, and there's open spaces. But when you're spending good money on these travel trailers and heck, on the RVs that are our type of customers on this type of deal, $500,000, $1 million type investment, like you're going to want a covered property or, covered unit for your RV boats, right? So that sort of set the baseline of why I got excited about RV boat storage. When Stuart called me late last year about the opportunity in Huntsville, I was really focused on multifamily. We did a build to rent community. Wasn't too in tune with what was going on in the boat storage, but as I was digging into it, I'm like, this is just blowing up, and it's just going to be huge for our investors because there's just not enough space, and we're going to talk about the reasons why. But let's go through these. One, high profit margins. The thing I love about the Huntsville location is I don't have to have payroll at that location. It's technology. People go in with a code that I can activate or deactivate by a click of a button on my computer. If you don't pay your rent, or there's an issue, or I need to reset the code because you want to change your code for security reasons, or you only want these people to go, or whatever the reason, I'm able to do that from a computer. I can be in Montana or Destin, wherever I am. I can be letting people in and out just through technology. So the payroll is quite low. The property's concrete. I mean, it's steel buildings and concrete. So there's not a huge amount of repairs and maintenance that we're going to have to be doing. From a tax standpoint, I mean, we're not doing these major renovations, interiors. I mean, the property is concrete and steel. And so from a tax standpoint, insurance, property management, and payroll, much lower expenses when it comes to compared to other asset classes, which I like. On the flip side of that is these type of units are going to command really good rents. And I'll explain that to you shortly as we go on. Generate reliable income. Because of the demand of these type of units, it's not like people, need to store their equipment, business, or whatever it is in these type of units for a few months and then they take it out. So typically you have a longer cycle of people who are going to stay at that unit because they're just not other types of facilities that offer the type of stuff we offer, or they're 100% full themselves. So there's a huge reliable income source. And these people that are investing, whether they're business owners and they're storing their business stuff, or their boat or RV or, classic cars, we're going to talk about our customers later, but they're typically in a different income bracket than people that are moving around a lot or doing different things with regular mini storage. I don't want to have anybody thinking on this call that this is mini storage. This is definitely a niche and definitely more of a higher income type of customer base. Not to say, doing regular storage, it benefits everybody, obviously, but you see where I'm going with this. Like RV boat, higher end toys, and business storage is where we're coming with on this. Post-pandemic, I mean, pandemic blew up RV sales, and it's just continuing. We're going to talk about how 14 million US residents or citizens have RVs, and they're anticipating another 9 million in the next 5 years. Another 9 million people to have RVs. It's crazy. And it all is stemmed because people just want to get away. They want to enjoy the beauty. Here in Texas, our state parks are incredible. They're cheap, per night, hard to get into, but you can roll in, do your 30 amp or do a 50 amp to 30 amp. And, people enjoy that, enjoy the river or whatever, and come back to comfort of your RV. And so it's just going to continue growing from an RV boat standpoint. And it was all accelerated, in my opinion, from the pandemic. There's a huge gap. If we go to the fourth one, there's a huge gap in the market. And I say that because finding the land and making the numbers work in a location that works is extremely hard. Like this is maybe one of the more expensive RV type projects because the size, the amount of concrete, the amount of electrical, the 30 amps that we're going to talk about shortly. But there's just a gap in the market from this massive buyers of these luxury vehicles, toys, classic cars, whatever the need is to store in a 20 by 50. There's just a huge gap in the market from what is actually available to rent. Increased RV parking restrictions across the nation. Many of us have lived in a neighborhood that was HOA, right? You can't even keep your trash can out more than a day without getting a letter in the email or someone taking a photo and sending it off and getting a nasty letter, much less having an RV parked there for a longer period of time. So like I experienced in Austin, like when we lived in Sweetwater, beautiful master plan community, but like I needed a place for that trailer, that RV, and I had to go out 20 miles before I found something that would that I could park, that I could cover because of the hail and other weather we get here. But this really spurs the demand for these type of units. If you live out in the country and you have the ability to have your own enclosed storage, that's great. But less than 1% of people in America have land, right? So, this is just fueling the demand for parking, RVs type storage. On the sixth reason why I really like this, appeal to fast growing demographics with high income renters. So what we're seeing in the RV marketplace is people in the ages of 45 to 65. Those are the people that are starting to buy in and I would say invest, because if you're spending a lot of money on an RV, it is in a way investing, but you're in a different demographic of people that are wanting this type of lifestyle. And so it is appealing to fast growing, high income renters. And we'll talk more about that, especially here in College Station. On the seventh and last one on this slide is housing boats, other toys, business storage. What got me super excited, everyone on this call, when I was in Huntsville and I was there a couple months ago, we were changing out locks and redoing leases, right? Important part of taking over a new property. It amazed me how many of these units were businesses are renting. There was one guy who had a trailer who his business was cleaning trash cans in HOA. Like I paid, a certain amount of money per month. They came every other week and they cleaned out my trash can. Well, his equipment and truck, like he just parked it in this 20 by 50 every day. And that's where he stored, his equipment. We had another company that had generators. They just stored their generators in this equipment. So when people bought a generator, they would go to the storage, get the generator and install it. Had another group, disaster recovery vendor, every day they would come get their equipment, supplies. And when I really thought about this, not only do you have like high-end RV boat storage, you got your hoarders, you got your people that have classic cars, you just want to work in the garage, but then you have businesses, and all this expense is a tax write-off too. So I got super excited on this. So when I came to College Station, I was like, okay, I need to find and build one of these. But people are going to be able to house much more than just RVs. And let's go to this one. Like I said, I was super excited about, because businesses that need storage, hotels, restaurants, offices, decorating design, retail, small business, construction, disaster recovery. If you think about the per square foot that they're going to spend in a storage, so I'll give you an idea here in College Station, 71 cents a square foot to 96 a square foot for this type of development. We're at about that 82 cents a square foot, right? So for 82 cents a square foot, where can you lease an office with utilities, et cetera, to store that equipment, anywhere close to 82 cents a square foot, right? And so these business storages can have a secure 24/7 secure access and a large 20 by 50. They don't have to like have half their stuff in one unit, half like 1,000 square feet that they can put their stuff in and secure it. Is huge. And so again, that's why the light bulb went off for me when I was in Huntsville, because I was like, businesses need this type of storage and they need it to be convenient. It's got to be right off a highway. And I'll explain why I bought this property for that reason shortly. So let's talk about the RV and boat storage. I already mentioned there's 14.5 million RVs in the USA. 9.5 million more, according to a survey, are expected to be purchased. So 9.5 million more RVs in the next 5 years. Now, not all of them are going to need our type of boat storage, right? It's a niche. It's fully enclosed, 30 amp power type facility. But they don't have these facilities that can keep up with that type of demand. So it's going to start growing, and you're going to start seeing a lot of institutional buyers, things that, think about storage 20 years ago and where it is today. Storage was a tax play, buy land, put some storage and depreciate, that property. So you get some tax write-offs. Now where it is today, it's a pretty solid income producing investment. That's where I'm seeing all these RV and boats coming down the road. 11% of US households with RVs, 12% of US households with boats. There were 493,000 RVs shipped in 2022, 250,000 boats shipped in 2022. Google RV boat growth or storage or sales, whatever you want to see, Google about this type of, investment or what people are spending their money on. It's incredible. And these RVs and boats, it's amazing what they can do to make it, luxurious and comfortable for people who are looking for that lifestyle. And that lifestyle could just be on the weekends, once every other month or once a year. That's again why they need the storage, so they can live in the city and go travel when they want. So the investment strategy here is straightforward. We're going to develop the property, we're going to stabilize cash flow, and we're going to refinance or sell. We may not need to refinance because we're very close on fixed rate debt for the whole period. I'll explain that shortly, but this is our hold. It's typically 5 to 7 years. If we are able to sell earlier and get the returns we need, great. But it's, our strategy is between 5 to 7 years, with the first year being of development, the next 6 months to a year at most, stabilizing the asset, and then refinancing and selling. So let's talk about why invest in Bryan-College Station. A lot of reasons. And actually, when I was, I live here, I lived in Austin. I mentioned Sweetwater. We sold at a stupid price. People with tech companies and all came, paid cash. And then we were like, where are we going to live? So came out of Bryan-College Station, very family friendly. We were able to buy some land and we just love it. So I can speak personally about Bryan-College Station. It's a great place, but it's also growing very rapidly. Number 1 in Texas on the U-Haul Growth Index, number 2 in the US on the U-Haul Growth Index, number 1 city in Texas for young families. It was ranked number 17 best housing markets for growth and stability out of 400 US metro areas. The population is actually larger than our Huntsville location, about 268,000 people as of 2020. It's 2023, right? So that number's, quite higher. I'm one of those people who moved in the area. Family median income whole is 74,000. And then one of the 25 best places to retire in America, according to Forbes.com. And I left that one there on why it's one of the best places to retire in America because of my next slide here. And that's because it's the home of the 12th man. I'm not an Aggie, but I respect the Aggies. And if you know a Texas A&M person or you probably have your gold ring and you're proud of it, right? So Texas A&M has enrolled the largest student body in the United States. There's over 73,000 students, right? And if you've been to the College Station area, it's not like one campus. Like A&M is everywhere, and just growing, the buildings and such. And there's a lot of people that want to move back to where their college town is, right? And so that's why, all these retirees are coming back. I've got friends in Cypress, Texas, who are, went to A&M. They're looking at, coming up here when they retire. And it just feels good to be back in your college town. On top of that, these people in their crowd, they don't sit down during football games. They stand constantly. The pregame show, everything about college football. And I say all this because a lot of these people have a lot of high net worth and a lot of friends, a lot of family, right? And they tailgate and they need places to store their tailgating RV and, trailers, whatever it may be. They're smokers. That's where this location and this type of facility gets even me more excited because of this 12th man mentality of Bryan College Station. And it's just anybody that's with A&M, the pride and the love for their university and their area and their desire to come back, it's really impressive. I'll give Texas A&M props for that. And part of that is because it's pretty smack down in the middle of this Texas triangle. Now, 66% of Texas population is in this triangle. 77% of Texas gross domestic product is made in this exact same triangle. So, if, Dallas up north, you've got San Antonio at number 2, Houston number 3, and so we're right at round 4. So we're very, very center, in my opinion, of the growth in the Texas triangle, which is, in my mind, fantastic. I truly see this, and how I plan to market it is people and businesses that are in Houston that are doing work in College Station, instead of bringing all their equipment and such, we find ways for them to store it, in our facilities. Up north, there's a city called Hearn. Those businesses and areas, they service Bryan College Station as well. Again, why bring all your equipment 30 minutes away when you can have your equipment right here, right? So this area is just going to continue developing and growing. So I'm super excited about the location in the Texas Triangle. So let's talk about this asset overview. As I mentioned, each unit is 20 by 50 in size. They're all 1,000 square feet. They're all the same. A lot of the storage units you'll go to or you'll find is that they're mixed space. And then the very, very back, you have the RV parking. And most of it is carports. But if you do get lucky with an enclosed storage facility, they're all leased and the units are like 10 feet wide. Like you have to be a perfect driver to get back up that RV. So what we're doing, and there's a picture of this in the background here, and this is our picture of our Huntsville location. So we'll have the 14-foot width, 16-foot wide, 14 feet wide, 15 feet tall. So we can capture the tallest of the RVs. In Texas, the maximum height in RV can be is 13.6. So at 15 feet, we're by far able to capture majority of vehicles that are on the highways, if not all, in Texas. The width is huge. Bad drivers like myself have a hard time backing in. So having that 14 feet is crucial. The other thing is I don't want to go out there to that door and have to lift by a little handle. The weight of that would just be awful. So these little 3-foot walkway doors are huge because you can go in and then you use the chain to help roll up your roll-up door. So we have the 14 feet wide roll-up door, and then you have your 3-foot wide. You're not seeing this in other areas. Even when I look at Georgetown and other areas in Texas, I'm not seeing these walkway doors and these large 13 or 14 feet wide doors, right? So super, super great. But each one of these is 20 by 50. Majority of these, I would say 90% will all have 30 amp power, which is huge. We're going to go through some comps shortly. These RVs and boats, et cetera, they depend on a 30 amp, 50 amp to power on. These higher electrical RVs that have like the 2 HVACs and the TVs and all that stuff, they depend on the 50 amp. So we're going to have a small percentage, probably 10% of the units as 50 amps, where we, ensure we market ourselves to the nicest of the nice RVs. But the majority out there are going to be like mine, and do a 30 amp, or you can do a 50 amp to 30 amp connection. So you still hit all those 50 amp RVs and boats, et cetera. So that's going to be unique. We're not going to have like a 110 volt, plug or enter like most of these units in College Station. They're actually going to have true power that can keep their RVs cooled, battery charged, ready to go year round. The other thing that's huge about these facilities is they have to have good drive lanes. I can build these big, large units, but if I do a small drive lane between these buildings, we're not able to satisfactorily, get our customers into their units without issue. So with the help of our civil engineering team, they did an amazing job. We were able to get these units on this property at 60 feet wide. The minimum that I would really want is 55. So when we got 60 feet, I was even more excited that any vehicle that of these RVs as such will be able to get in and out pretty quickly. The other thing huge here, you'll see on this picture, it's all concrete. So there's no gravel, it's all concrete. And so that's another differentiator for us in this market. The other differentiator for us is this black gray water dump station. If you're an RV or, person out there, sometimes you just don't have dump stations where you are. Or if you're boondocking and you want to, you're not just going to, release all that water, where you are. So you bring that back. We have a community black and gray water dump station. It will be fully fenced, security cameras, lighting. This facility will be meant for this type of customer base. And this type of customer base, as we talked about earlier, is in need of places like what we're doing. The other thing that's huge, and it's what I saw in Huntsville when I was there, as I mentioned earlier, is that location is right off the highway and thousands of vehicles go by that daily. Here, 65,000 vehicles pass by daily right off Highway 6. Highway 6 is, you get off 290 if you come from Houston. Highway 6 takes you up to Waco, up to Dallas, right? It's a major highway artery for us in College Station, but 65,000 or more vehicles pass by daily. And I was calculating, I was like, in the population of College Station, like I would need 0.0002% of people to lease one of these units. And even if I didn't get that, which is already a pretty low percentage, 65,000 vehicles are passing this facility every single day and seeing my sign. And I'm like, from an investor standpoint that you're on this call, location, and visibility and being able to get off. These other facilities that I'll share shortly that are here, they're 3, 4, 5 miles off of Highway 6. So even when they're traveling into town, they still have to go, another 3 to 5 miles to actually get to their location. So to me, that was super exciting with all that we were able to do, differentiate ourselves, and then have the Highway 6 location was super exciting. So this storage facility site on the left here, we got Mueller and Cy-Fair Tire Road Shop. So where this red dot here, that's where the property, that's 4.828 acres. You'll see the Texas 6 frontage road, it's Highway 6 there. The zoning is already approved. We've got a mechanical engineering, plumbing, et cetera, in process for approval. What I'm really proud of, and I'm excited, I always tell the team we're going to rinse and repeat this type of investment into other markets, is in here, we're all local to Bryan College Station, and that's just going to speed up the timelines. Now let's talk about financing. We all know the financing markets are all over the place right now. I am using or working and partnering with a local community bank on this type of investment. We're going to go to Austin in a couple of weeks to meet with the committee, but our goal is to have fixed debt financing for the full term of 7.75%. That's at a 65% loan to cost value with a 2-year IO. If they don't approve that, which there's always that chance, just given what's going on in the market, we'll do a traditional construction loan, which is what you typically would use in this type of deal. You would do a construction loan, like I've done on another development in Louisiana, and you use that money along with the equity we bring in to develop the property, get it stabilized, and then you refinance it into longer term debt, right? And when you do that, it's actually better because you could pull out, hopefully, you've added value to the property and you can, bring back cash to our investors, and then they can still earn the returns as if they had the cash in. What I wanted to do on this presentation, and what I try to do, is like worst case scenario. So we're going to look at some numbers shortly, and it's, in my mind, it's always a risk, right? All this is a risk, but I want people excited about the 7.75% rate and not refinancing, because if you get excited at that point, fantastic. In my mind, you're going to get more excited, because if we didn't have a fixed rate debt and we decided to do more of a construction loan, then the return should even be better, because we should be able to refinance into lower debt and get cash back. With all that said, I want to sleep at night too, right? And if I can get our investors a fixed rate debt up front at 7.75%, then I don't have to worry about the market in 18, 24 months, right? We can be like, hey, this is our debt. And you know what? If rates go down, which we all bankers, everybody I talk to feel the rates are going to go down. And if you have that mindset, no one has a crystal ball, but if you have that mindset, like, yeah, interest rates are going to go down, we're going to go, there's going to be some juice that needs to be put back into the economy. So interest rates are going to be that driver. Then we can still refinance it even when we have this fixed rate debt, right? So there's multiple ways, but anytime we can get fixed rate, it's huge. And using a community bank, we're getting very close to that. So more to come on that. If we do get into a bridge debt situation or a construction loan, we'll buy a rate cap, just like what we did at all of our other, my construction property in Louisiana and our property, one of our multifamilies in Houston, we'll buy the rate cap. So that way we can still get around that 7.75, 8% rate and not be exposed to the market. I promise you, we will not be exposed to the market. We will be fixed rate regardless of what we're doing, whether it's through a rate cap or it's through a traditional fixed rate, right? So moving on to who are our customers, and we talked about this a lot: RV boat owners, business, personal storage, hobby and collectible storage. Some of our customers just want to get away on the weekend and work on their cars. We saw that there when I was at that property. This is it's a massive space, and the space. You see these two cars working in, like there's enough width to actually move around. Some of these units are like that 10-foot wide. It may be 50 feet deep, but that 10, 15 feet wide, it's not a lot of space. The 20 feet, you can actually have some room and work on cars, do more of a hobby, collectible storage, which you couldn't do in your HOA neighborhoods, and such. So personal storage, I mentioned hoarders earlier, no disrespect, they need space. And, we had customers that had stuff there. You've got people who are in a transitional stage, whether they're moving or, if someone passes away, they have to store their stuff, this type of equipment. I had lunch with a great friend a couple of days ago. She's in the landscaping business and just storing large Christmas trees, seasonal decoration. There's not storage like this, fully enclosed storage that's, convenient locations, reasonably priced, et cetera, that aren't 100% leased. So they could have used a storage facility such as ours. Instead, they had to put some storage part of the tree in one storage and another at her other location there in Houston. So there's all these different customer bases that we're able to base off. Yes, RV boat owners, that is a big group that I like to go after, right? But businesses, hobby collectible storage, personal storage, that's also other customers that we'll be targeting. So here's a map here of Bryan College Station. You'll see 1820 North Earl Rudder Freeway up at the top left, at least on my screen, it's the top left. And you'll see that we're very close, within 15 minutes or so at most, to anywhere really in College Station. And you have a lot of high net worth neighborhoods that are maybe 10 minutes. And if you go down Highway 6 to South College Station, where there's other beautiful communities, I've timed those and they're about 15, 16 minutes. So it's because of Highway 6 here and how fast you can, how efficient this highway is, you can get to our location really in any parts of College Station within 15 to 18 minutes. So I really like the location. Again, it's right off Highway 6. College Station land price per square foot can be upwards of $10 to $15 a square foot. We bought our property at $4.50 a square foot for the land cost itself. And I didn't really go into this, but I found this property off market. I drove by it, had a sign said build to suit. I knew exactly what I wanted for the property because of my excitement about the Huntsville location, and found the owner. And we've actually become really, pretty good friends over the last, month and a half. And ironically, they own about 1,000 acres next to my property. So anyway, small town in Bryan College Station, a lot of people, but still, always a small community. So bought that property last Friday off market. My point is here, team, is that $4.50 a square foot compared to $10 to $15 a square foot down this highway. So buying in a off-market situation at a price per square foot less than what we could have gotten other parts of College Station is huge. This is a picture you've seen sort of in the background, just more of a clarity photo of what we're doing here. Notice the drive lanes. This is the interior unit at our location in Huntsville. You'll notice that they're all sprinklered as well, or at least this picture shows sprinklered. It is Brian code to sprinkler all these units. So we'll have them sprinklered. In the back of this unit, you'll see on the beam, there's electrical there. That's where the 30 amp connection is. And then you'll have your LED lighting on both sides of the walls here. So each unit, there's going to be 72 of them. They're all going to look just like this. I already told my kids, you're going to be coming out. We're going to be cleaning some stalls. If they ever leave, we're going to be cleaning out, and you're going to be helping. So I'm putting my kids to good work in keeping this space cleaned up. All right. So 20 by 50 storage site plan. One of our civil engineers who's been fantastic through this project has helped us out here. I'm going to try to explain what we've got going on here. So you'll see Highway 6 at the bottom of the photo. Then if you go up north of that, you're going to see like these circles. So City of Bryan requires 15% of your developed property to be landscaped. So you're going to see on the perimeter of the property and throughout, you'll see those circles. Think of it, those are live oaks and crepe myrtle trees. So we're going to have quite a bit of landscaping. Behind that, you'll see like this little checkerboard. This is going to be a retainage pond area, right? And so this is not in a flood zone, but City of Bryan does require that we do have the proper retainage ponds. So through our engineering team, they were able to determine how big that needed to be. So that's designed here. As you go up a little north of that, you'll have our entry gate coming off. There's a shared driveway over to the right over here. You'll see that shared driveway, and then you'll turn left into our property. And what you'll have are 60-foot drive lanes in between buildings. And then as they circle around, you'll have our gray Blackwater station, and then you'll have access to any of our units, through here. We have emergency gates on the back side of the property to meet with code. But this is the site plan. It's 3 buildings, 24 buildings each, or excuse me, 24 units each, all with the 20 by 50. Here's another diagram of how the units are being designed or engineered. This is just one of the buildings here. Again, you'll have units on either side. You'll have 3 of those units, 3 of these type of units. All right, so let's talk about the comps. When I found the land, I was like, all right, well, now we got to find the comps. I went to the furthest south, right off Highway 6. That was Cube Mart. Cube Mart went in, and they have all these different size storage facilities. They do have enclosed storage. So I was like, okay, great, let's go look at it. They're 12 by 40, 78 cents a square foot, but they're 10 feet wide units. And they didn't have a gray or black station. They didn't have, they had the 110 volt power. And though that does suffice a good customer base, like they're, all but 1 unit as of yesterday was leased. Like, I'm like, okay, well, that definitely services, a portion of clientele, but it doesn't compete with what we're doing. Right. And that 10-foot wide, I mean, that would be extremely tight for me to back in my camper without screaming at my wife or my wife screaming at me to try to back it up properly. So that was comp 1. No, 78 cents a square foot. So pretty solid. So in that case, about $780 a square foot if they were leasing up our type of property. Arrington Road self-storage, just another unit I found, was 14 by 50. 1 unit available. They had blended with other types. They had gravel road, 110 power only, no gray water dump stations. So I was getting more excited after this. I was like, okay, high demand. And again, they're not doing what we're doing because it's mixed with other types of sizes. It's gravel road. They don't have the power. There's no gray or black water. I mean, it does take certain customers, but it's not exactly what we're doing. Now, Morningstar Storage had 0 units available as of yesterday, blended with other unit types. Some have 30 amp, but if I was parking my camper, I'd have to drive in the grass to back it up, which, for, some people that's fine. For me, I've done that at one of my other storage locations. I got stuck and had to get my truck with my trailer. It was not good. Wet grass with RVs, not a good idea. So I was like, okay, well, they're doing 93 cents a square foot at their location, and they're, zero available, and they're still not doing what we're doing. Now, Carson's RV is a little different. Carson's RV resort is an actual RV resort that has storage on their property. Now, their storage is 100% occupied. They had the 110 power. They had the dump station because it's in the RV park. There's gravel roads, and it's 4 miles off Highway 6. It is a comp, but it's not one that I'm, one is 100% leased. So even if it was a comp, it's not, it's already 100% leased, right? But second of all, just the distance between the buildings, the gravel roads, and it being so far from Highway 6, it just, in my mind, wasn't really a good comp. But do want to put that out there for everybody. And so what we're doing, 20 by 50 storage. And we're seeing 20 by 50 storage on all the slides because that's the name of this place. Like, I'm not trying to make it rocket science. I'm not going to Morningstar storage. You wouldn't know that they have this type of large unit. So it's obvious, 20 by 50 storage. And I've already purchased 20by50storage.com. So as we scale in Texas and throughout, like, we can do this, right? But for now, 20by50storage.com will be the website for this Bryan location. They'll all obviously be 20 by 50s. We've got it priced at 82 cents a square foot. And I averaged it out. The 47 cents a square foot, in my mind's a nominal. It not a real, in my mind, a true comp. But between the 71, 78, and the 93, I sort of met myself in the middle because of all the things we're providing, the location, the amenities, the power of the units, et cetera. I'm at 82 cents a square foot. We've talked about these other things and why, we're different than these others. But in my mind, we've got a great product that is extremely needed. And it's proven just in these 4 other storage locations of just how high demand is, even for properties or units that don't even have what we are going to be offering. All right, so let's talk about the deal breakdown. So the total loan right now is 4.2 million. Investors' equity is about 2.5. This number may go down from 2.5 to maybe 2.25. So you'll see in the private placement memorandum, there's some 2.5 is going to be on our max side. 2.25 is probably more in line with our target. But the use of funds here, we've got site acquisition and engineering design costs at $1,052,000. That includes our civil engineering, MEP, all the upfront zoning, not zoning, but getting everything through city for approval for actually building. The cost to build is $5,084,000. I've got a lot of contingency in here. I just think with steel and supply, there's a great opportunity for us to reduce this, even upwards like $900,000. So we'll see if we can get this number down. But I wanted to make sure we are comfortable on our equity raise and our loan, so that way if we have anything that comes up that needs to be done, we're not having to do a cash call or anything else. We have enough funds. And if we're oversubscribed with our investors, we could look at returning capital back to our investors because we raised too much money for what we actually needed. That's not in the PPM. That's more of, long-term strategy, but this is where I'm thinking based off prices that we've prices that we've already received to build. So 5 million there. Development fees, about 4% of the total cost, including the land. Loan fees and cost is 108,000. And then the operating reserves, 200,000. So the total investment with our loan and equity is about $6.7 million. So let's look at our 20 by 50 storage cash flow before debt service. Year 1 and year 2 are interest only. Okay. So, but year 1 is really if we start, when we close on the loan, in my mind, that's month 1. And then we develop this property over 9 months, and then we start leasing up. So you're going to notice the net operating income on this is quite low, because year 1, it's a year of development. There's not a lot of, I really anticipate 12 months to be completely done with construction, from design, et cetera, into construction. So net operating income is getting through. We will have interest reserves. Part of that, the loan costs on the last slide are pre-funded reserves for our interest payments during the construction period. So we're not needing, say, the cash flow year one to pay our debt service, right? We'll have that already to the side. Now, year two, we will still have interest only. And so on one of my next slides, it'll show the returns. So year two, solid year of returns at the, and we've got a net operating income of 446,000. You know, we take out asset management, we got 434,000 from operations. On this, I want to point out, notice payroll is zero. So I have that in our management fee. CREI Partners will be managing the asset at this location. And so where I have it all is in this management fee. So from an accounting standpoint, if, you know, returns go drastically better than this, then the PPM allows for higher percentage. But just from a baseline percentage, this is where we are. So you'll see payroll zero just because it's in the management fee. You also see contract services. This is a lot of our like credit card fees and our software. The software is going to be our biggest expense here. Is about $450 a month, but that's the software. Like if you don't pay your rent, which is one thing I love here versus other asset classes, don't pay your rent, I just deactivate the code. You can't enter the space or access your goods until you pay the rent. So that's part of that contract service software that we have here as well. We'll have some make-ready cost, insurance here as well. So, you know, this has been priced out. And then our property taxes are 100% based on the value of the property. So I'm assuming on this, and it starts phasing, but it'll be 100% of the value of the property. So we're not doing 80% of value. Not, you know, we're budgeting conservatively on property taxes. All right, so let's talk about investor return projections. On the, remember, the debt service is 7.75%. So you have that net operating income, positive income, and then you've got our debt service that needs to be paid, and then the returns out. So year one is construction year, right? Year two, we expect to, you know, by 18 months at the latest, start having, you know, being fully stabilized, cash flowed. So we'll have a cash flow of 6.37% on year two. You'll note on this, because the interest, we're still in the interest only, year two has a higher return than the future years. Year three is 3.96%, year four is 3.37. Year five, when we sell, we'll have the equity influx for a total return equity of 204.7%, or over a 2x equity multiple. If we're able to refinance, or say we did a construction loan, and I'm going to do what's best for our investors in the project here. So say on the debt side, we decided, hey, we're going to do a construction loan, say 18-month construction loan, get us through the development, we refinance, you know, cash back to our investors, and we still are cash flowing, right? Then these cash on cash returns are higher because you now have a percentage of the returns back. That's a scenario, but I always want to say, like, hey, be excited about this scenario, because if you are, then another scenario may be even more exciting. Tax depreciation, I know many of you are, you know, we all as real estate professionals want, you know, tax depreciation. I really expect that to be in year one. Year one is not calendar year though, right? So I don't expect a lot of tax depreciation in 2023. But in 2024, we'll have the full tax depreciation. We'll have a cost segregation study, and we'll provide the K1 on that, showing the returns there. So there are two options here from asset classes that you'll see. Option one, Class A, is already full. That was the 500,000 minimum investment, 10%. This actually, Class A, I started doing this on investments. This actually benefits our Class B investors. Say your IRR is 15% IRR. For the investor that's just wants that 10% cash flow, they're not benefiting from the upside. So it brings more upside to the Class B investors. So a Class B 7% preferred return, it's cumulative. So if it's not on year one, then it accumulates to future years. And then, you know, so at a preferred return, that 7% is hit before any of the returns goes to the general partnership. And then it's a 75-25 LP GP split. So in this example, sample return on 100,000 investment becomes $205,000. Projected IRR is 16.77, and the equity multiple at 2.04. So some sensitivity analysis. So my base case vacancy is 6%. As you saw in those other slides, that only one unit was vacant. So you'll have the different vacancy studies here. So scenario 5 at a 12% vacancy at a levered IRR, we're still around that 20%. Exit cap, though, they're at 7 on the next one. If we did a base exit cap at 6%, so it sort of guides you through if it was a 5.75 where it would be at. So on a 7% exit cap, the levered IRR is 9.23%. Base case 17.93. And we've got, if we're at 5.75 exit cap, we're at over a 23% IRR. On the income growth, our base case is 2%. If we're going down to 5% on income growth, we could have a 30% return. But, one of those slides showed I think it was 93 cents a square foot. We're at 82 cents a square foot. So there's room for us to grow. And we will determine what that sweet spot is for occupancy and rent. But even on this income growth of 2%, I think it's pretty conservative. On the expense side, we have it at 3% expense growth. So we'll see, and we really shouldn't even have many expenses as shown on the previous slide. But just staying conservative, I wanted to be lower on the income growth and higher on the expense, which all goes into play with our cash on cash and all. Again, I'm wanting to make sure that we're conservative and not messing with these numbers to make these numbers look extremely attractive and not able to deliver. So let's talk about the storage timeline. We just got a few more slides left here. So land purchased on June 23rd. We're doing our investment webinar today. Thank you for being on or listening after. Investors are onboarded with PPM. So July 14th is that magical date that we're trying to get everything in to the system. As I mentioned, we were 60% subscribed. I don't know where we are today as of this webinar. I assume many people have already done the QR code at the bottom right corner and soft's committed, but we're trying to get everything in by July 14th. If you are opening an IRA or something that may take a little longer, let us know. Courtney Benduro, many of you probably get emails from her. She's our director of investor relations. She'll be working closely with everyone just to make sure that the process is as smooth as possible. But just think July 14th from a cash standpoint. Now, signing the documents and soft committing, I highly recommend doing that over the next day at the latest, because once the commitments are in, then those investors have the priority to go to the next steps to, from a wiring, et cetera, for this July 14th date. We're hoping to close on the construction loan on August 4th. That's the date that we're targeting with the community bank that I mentioned. And then push into a year of construction completion. So what I'm expecting to happen, and talking with our local partners here with the different trades, is we'll close on the loan in early August. But for the month of July, we'll spend a lot of the time getting the plans and everything ready to submit to the city so they can bless to make sure everything is up to code, right? We already have zoning, so we don't worry about that, but we need to make sure everything's up to code. Once they approve it, then we will order the material, the steel. That should take about 3 months to get in. I don't want to pre-order the steel without everything being approved, because this is our investor capital. We're fiduciary to that. So we'll wait. That'll be about 3 months. So, we will get ground broken in 2023. Very confident in that, and then finish, by this July of 2024. Each building, remember those 2 units on each side, 24 units per building, should take 1 month. This is a pre-manufactured building. So, the pieces will come in and they will install. The same group that we're buying the material from is going to install. And each one of those should be about a month process. So they actually putting up this type of building should take about 3 months. So we'll see about 6 months between materials ordered and actually finishing. and then we'll look to, continue stabilizing. And the thing that we didn't really talk much about either on this is that we will start from the back and then move ourselves forward. So we will start leasing the back building first as we're working on the 2 units in front, right? So we will start seeing a lease up earlier than even this schedule shows because of the phased approach that we're doing. We anticipate to sell August 2028 to July 2030. If we, on our Huntsville location, we've already seen a lot of activity with the brokers asking us about pricing. We just bought the property, and we're still in a part of our value add there. But it is exciting that there's a lot of demand, a lot of excitement about it. I would not be surprised if as we develop this, we get offers from institutional buyers and other groups that are local to College Station looking to buy in. Remember, our purchase price was at $6.5 million with equity and the debt. So if we're exiting at $8.5, $9 million, which it's not, we at the Huntsville location, we paid $11.5 million for that development. So here it is a smaller development, smaller property, but there's a lot of monies that are going into this type of development. So we'll see, but I always want to say worst case, anticipate 5 to 7 years. All right, I mentioned this early on. We're down to our last couple slides here. This is a 506c offering. So it's open to accredited investors. Accredited investors need to furnish proof of substantial income, either your $200,000 if you file single, or $300,000 if you're married over the last 2 years, or have a net worth of $1 million. In order for us to do it on either of these, we'll need to have documentation from one of these 3 ways. 1, certified public accountant. Typically, they just write a letter and state that you meet the accredited status. We don't need to know what your actual net worth is or anything. We just need that letter, or an investment advisor that's registered. The other thing you could do is what I push a lot of investors to do, because it's just super simple and it's fast, is the www.verifyinvestor.com. I don't get any kickback for saying that website, but it's just super efficient, and do that. Now, if you haven't invested in one of our deals in the last year, then we'll need a new one. If we're within that year time frame, we should be fine using your accredited letter from previous. So reach out to me if you have any questions, or Courtney, and we'll get you all set up. But for us to stay compliant and make sure that we are dotting our I's and crossing our T's, we want to make sure we have this document for that. So this slide was similar to one of the first few slides, but if you're interested in investing, please submit your commitment today. First come, first serve. You have the QR code there, and the minimum investment is $50,000, as one of the slides stated. You can invest through cash via wire, or if you want to invest through an entity, we're open to that. If you have an IRA or a business that you prefer to have invest that way, we've done that as well. So we can talk through it. The private placement memorandum is up on our portal that has our document, our subscription agreement, et cetera, that you can review and sign as well. And then Courtney and I are available. I am excited for this opportunity. I know I've talked a lot, I'm losing my voice, but this, in my opinion, is a super exciting project, and it's in my backyard that I can really focus and make sure we're taking care of our investors and having a successful project, and hopefully do well by everybody, that we can do another location like this in other parts of Texas. So thank you for being on today. I'm going to spend some time answer any Q&As. You can in the system do any Q&As for those that are still on, and I can answer those. So if you have a Q&A, go ahead and put it in. All right, we got one here. It says, when will the tax depreciation be? Great question. We're looking year 1. So first 12 months, we will have the development complete. Expect the tax depreciation on the K1 for 2024 tax year, not 2023. I don't, the land you can't depreciate. We got to have actual growth or development. Who will be managing the project or developing and managing? So CREI Partners will be managing and developing the project. We're local here, have full-time team members that are going to be focused on the asset. Really great question. Any other questions? All right. Well, thank y'all again for spending an hour or so with me this evening. Please reach out. My cell number is 512-710-2500. Again, 512-710-2500. Oh, I did get a couple more questions. Really good question. So can we charge customers for electricity? Great question. The answer is yes. I'm working with an MEP engineer where we can have a way where we can bill electricity to our tenants. So we fully recover that. The other thing I'm looking at doing is doing a rolling electrical throughout the day, as part of the rent, or if they want fixed electricity, then we charge it per month. So that's something I'm working with the electrical engineer on. But it's a really great question because I'm trying to find ways to reduce expenses everywhere that's possible. One of those expenses being electricity, especially because these units will be connected to them. So great question. The private placement memorandum is not going to be on the CREI Partners website. It's actually going to be on the investor portal. So if you, and I'll send, Courtney and I will send out the link directly to it. But when you go in and where you've subscribed or reserved your investment, you'll be able to advance in the portal and you'll see your private placement and memorandum. It's not going to be public until you, reserve your spot. And remember, reserving your spot doesn't make you, you're not putting cash down or anything today. You're just reserving your spot and then it'll take you to the next place. Yeah, it's a good question. So do you have an overall sense of storage competition in the area, considering all the areas desirable points mentioned? Yeah, there's only the 4 locations. And 2 of them are in South College Station. And again, they had like that 10-foot wide storage with the 110 amp. And then you had the one that was like 4 to 5 miles off Highway 6, part of that RV park. So there's only the 4 locations. Even if they were competition, which I'm not underestimating competition, but it's not like in multifamily, which I love multifamily. But it's not like multifamily where there's apartments everywhere, right? And I'm truly competing with the people across the street because they're an apartment building. Here, it's location, it's ease of access, and it's the amenities for, our customers. So 4 locations, two of them didn't have any vacancy, 2 had 1 each. And they didn't have the dump gray stations. They didn't have the 30 amp, 50 amp. They didn't have the 14-foot wide doors either. So really great question. I think because of our location, and we're going to have the beautiful sign that's going to be bright. And as everybody drives down Highway 6, they're going to know that 20 by 50 storage is there. It's a good question there. How are you going to market? Are you going to pre-sell units? Yeah, so we are marketing one, as I just mentioned, just by a big sign on Highway 6 that has 65,000 people. I mean, that right there is location and free marketing just by that sign. Also, the massiveness of this storage facility, as you drive by the highway, you're going to know what's here. And then the name 20 by 50 storage, you're not going to be confused by what it is, right? So that's number 1. 2 is we're going to be pre-flyering the markets. So there's many neighborhoods that are higher end in College Station. So we will start, doing neighborhood letters or postcards out to all those neighbors as well, and then going to the businesses. So the RV business, they're going to Google. Obviously, we're going to have a good Google presence, SEO. We're going to make sure that people are able to find us online Because when I'm looking for a spot, like I did in Austin, I just Googled RV boat storage zip code. We want to be up in center, right? And we will. But businesses is going to be huge. I can push rents much easier on the higher end RV boat and also on the businesses, especially on the businesses because it's tax deductible. We are going to pre-sell or sell from the back forward. So even as we're developing, the plan is to be able to lease the back facility. So there's 24 units in that, or 24 units in that back one. We're going to lease that 2 months before the final building's built. So as each building is built in a month, each month a new building's built. So we should be able to roll our selling. So another question here is there staff? How do clients sign up for a unit? So there's myself and the CREI Partners team, but it gets really better than that. It's all online. If you go to the website that we will have, and I can share the website we have in Huntsville, Alabama, you go online and there's a waiting list for one, so you can't really reserve. But if you were able to reserve, there wasn't a waiting list. You just fill out your information. It's actually a code that you would be given to go look at the unit. With it being only 20 minutes from my house, I will also, and being full-time on this, I will also be able to meet people, especially during lease up. But this is a type of environment where everything can be online. I'll give you an example. When I leased that spot that was 20 minutes away from me in Austin, I never knew the owner, never saw anybody. Everything was done by email, online code. The gate had a keep access code, and I went in with no issues. All online payments. Everything is through the portal. I'm not accepting cash or checks. Everything has to be paid by credit card on the system. And then if you don't pay by the 5th, the unit automatically locks out. And to get access to your unit, you got to pay. And if you don't pay, then we can take to auction. So it's pretty standard procedures there. These leases are also month to month. So they don't have to do the 12-month leases. We'll have specials for people that are doing the 6-month or 12-month. But another benefit of these will be month to month. So really great question. We had a question was, what is the management fee? So it's a fixed fee, and the PPM, it'll talk about a fixed fee, which is the $2,000 per month. Or as time goes on, it could go up to the 5%. So right now, I want to make sure there's enough cash flow for our investors and sort of reducing risk. So I've got the $2,000 a month management fee. Now, about half of that a month will be bookkeeping and accounting, so, and then the rest will be for managing the asset. The leasing will be done online. Everything is done online, or meeting in person, which I'll meet them in person and my team will meet them in person, but then we will move them to the online system where they'll fill everything out. So really great questions. Any more? I feel like once we opened one question, a lot came in. So it's awesome. Keeps things very dynamic. The loan is through a community bank right now. It's Vera Bank. They're based here in College Station. We are working with them because of their reputation and their willingness to do really good rates. It's very hard in this lending environment to have a loan even being considered a fixed rate for construction during a hold period. Most constructions usually a construction loan that rate is tied to the market, and then 18 months or 24 months we're refinancing. And that may be a possibility here, which there is some benefits to that, in which we'll do a rate cap. But for this presentation, it is a fixed rate. And I did it as a fixed rate because the returns on an annual basis are lower, but the risk of the interest rate increasing, in my mind, overcompensates that, if that makes sense. And I'm happy to have one-on-one conversations on it. If we did a more traditional construction loan, then we would buy that rate cap, regardless of what the market's doing. We would still have a max rate cap, and then we would refinance it once the property is stabilized, pull out our value, gold, get our investors back some cash, and still cash flow as if you had that money in the investment. So in a way, I'm trying to under promise, over deliver, and really just ultimately show like, hey, me personally, I'd rather be conservative. I'd rather have fixed debt for a period of time. But if I have to, then I'm going to do the construction loan, but have the rate cap that will purchase. So I'm not losing sleep over what the markets do. That was a really great question. But the community banks, you typically get better rates and the relationship status. Like I mentioned, in a week and a half, we're going to go to Austin and meet with their committee. And last Friday I met with the CEO of the bank, and we're building a long-term relationship with them and others. So. I've got a question here. Considering rates are likely to decline, have you priced out floaters? If so, what will that be today versus the 7.75 fixed rate? Yeah, it's just the unknown. I talked to the lender today. We may do a floater. That's that construction debt. And today's prime rate, they base it off prime rate. It'd be about 8.25%. Now, if I did it at 8.25%, we can get the numbers, because remember, during construction, we're raising the money to cover our interest payments. We're not losing sleep or anything during construction because we've already raised that money in a bucket to pay our interest on the development. So if it's 8.25, I'm okay with that. However, I want to be capped at that. So we'll probably have to pay a rate cap, which would be part of our contingency funds that we have. And that way we all know, like, if it went up to 9%, we're not losing sleep. We don't want to be in a position where we are floating with the market. I do hope rates go down. And if the rates go down, then our returns and our excitement about this project just gets a lot sexier. It really does. But for today's environment, and what I can know with certainty today, is getting a fixed rate and go. Now, if we have that 7.75, which I'm really hoping I love fixed debt in today's environment. So if we can get that, and then in 18 months, we see that there's properties developed, we have it stabilized, and we're able to refinance it at a lower rate, we can do that. We'll pay a penalty, but we'll be able to do that, and so there's still options. Even though it's fixed rate, we can still refinance, and really the bank wants to keep us. So, we will hopefully refinance with them, or negotiate with them, along with others if we have to. So really good question. Floaters are okay as long as there's a rate cap. And even then, we just need to be mindful of the value add component of it, because it's definitely higher risk. On my development project in Lafayette, our interest rate, now we have a rate cap there, but it's about 9%. So the 7.75 in today's market, because that one's based off SOFR, 30-day SOFR. So you have this fixed component, then you have a floater, which is the 30-day SOFR. So when I see the 7.75, it seems high. Even I'm like, oh, 7 but really it's not in commercial lending right now, and especially the risk of new development, new construction. It's a very attractive rate. All right, keep the questions coming in. A lot of great questions. All right, well, thank y'all so much for being on. Again, that QR code, please go ahead and register if you haven't already, or continue with the PPM. If you have any questions, Courtney and I are available. We'll send out more information and get this one done on the equity side, and we'll get the loan and keep pushing forward with our team. Thanks, everybody. Y'all have a great evening, and look forward to partnering with y'all on this project and talking to y'all soon. Bye.